All right, good afternoon, everybody, or morning, depending on where you are, and welcome to our Open Tribe Deal webinar today. That we appreciate the Legacy Group coming. Josh, appreciate you being here. I do want to flash up a little disclaimer first. We're going to start posting these before we jump into these deal webinars. Just it's our legalese, just to let people know that they need. I won't read this, but these deals aren't vetted by left field. These aren't recommendations from the founders. Everybody needs to do their own due diligence and decide if they want to get into these deals or not. But we want to be sure everybody understands that before we jump into too much on this. That should cover about as much as I need to cover on this. And with that, actually, we're going to kick this to Eric first. Eric's going to talk about what TribeVest is helping us out with to allow for an open tribe for this offering if people would like to get invested in the deal through that venue. So Eric, go ahead.
Yeah, thanks, Chad. If you listened last night, this is going to be where if you were on the monthly meeting, this is going to be a much abbreviated version of that. So for this investment, we are opening an open tribe for LFI. If you're wondering what is an open tribe, it is a turnkey, fully managed single investment vehicle. TribeVest handles everything in the entire process, from the soft commit to the dissolving the LLC and everything in between. How it works, I'm purposely going quickly because most of you probably heard this last night. We'll collect formal commitments. We have to meet the minimum of the investment, which I think is $100,000 on this one to make the investment. So we'll take soft commits. Once we cross that threshold, the LLC will form the LLC. We'll onboard you. We'll collect funds. We'll go through. This requires accreditation investment, so we'll get everyone accredited, and we will communicate with the operator. We'll get all the money or the documents signed, and then we'll invest the money. We'll send it out, send the wire. Ongoing management. After the investment is made, you'll get all the communications that come out from this investment. If there are distributions, they'll come out quarterly to you. We'll keep the LLC compliant, and then yearly you'll get a tax K1 from the tribe. Again, also you'll have a TribeVest platform, so you'll be able to log in and see, and you'll be able to see the bank account and any voting or messaging. It's a community-based platform. Our community of this tribe you'll be able to see everything going on. And then we'll dissolve it after the investment runs its course. From a fee standpoint, it's $150 to join the tribe. That covers your taxes. $75 of that is taxes, but that helps us get everything set up. One thing new since last night that we talked about is we're adding a bonus for LFI for the ongoing fees. 20 plus members will cover year 1 and 2 fees, 30 plus members 1, 2, and 3, and 40 plus members 1, 2, 3, and 4. So really we're working on those fees in the future, really trying to make that a value add for the community as more people get involved. So if you have questions on that, well, let me go to the next screen. Last one, in the email that'll come out from Jim next week, or this webinar recording, click on the soft commit form. I also am posting my contact info. You can call, text, email me, and the soft commit form if you want to get involved. And I have to jump off for a lunch appointment, but I will watch the webinar recording. I'm very curious of this investment.
Great.
So thank you.
Thanks, Eric. Appreciate that. Thank you for the work on the improvement there. That's nice from 12 hours ago.
We talked right after. You can thank Travis for that one. That was his idea. It's a good one.
Perfect. Cool. Well, thank you for that. Well, okay, great. Now, so we'll jump into the bones of this then with Josh, and Josh can walk us through the offering that Legacy's bringing. I will throw out real quick too, if anybody has any questions during the presentations, feel free to drop it in the chat and we can catch those throughout or at the end or whatever. But Josh, take it from here. Appreciate it.
Thanks, Chad. It's great being here with you and the LFI community. And thanks, Eric, for that. It's been a pleasure working with you guys over the last year. Had the opportunity to present kind of what we do at Legacy Group and through our portfolio companies during a podcast with Jim early in 2022. We stayed in touch. Maybe some of you hear us on the podcast ads. We recently started running some ads there. And we have a couple investors from the group. So we thought it would be good to get in front of you, kind of tell you what we do at Legacy Group, our latest investment offering in Green Coffee Company and the Series C funding round. So I'm going to share my screen. I'm just going to give you a brief overview of the business and myself. Then we're going to do a quick 2-minute video, which I'll put on screen, which will give you a nice visual of the company and our 2022 harvest overview. Then we'll go back to the slides. I'll walk through the terms of the Series C funding round, what gets me excited about it, kind of the path forward and what we expect to do with the proceeds from this funding round, and how we expect to deliver an exit for our almost 400 investors here. So without further ado, let me pivot over to these slides. Just give me a moment while I share my screen. Okay. We're just going to start with a couple slides here, and then I'm going to go to the video and we'll jump back to the presentation, as I mentioned. So Green Coffee Company, it's a US-based investment opportunity. So, but the company itself is Colombia's #1 largest coffee producer. This is a really unique investment in which investors get direct access to emerging markets, to commodities, to over 7,000 acres of land holdings, over 8 million coffee trees, in a truly innovative coffee industry. And we're really disrupting the Colombian coffee market with what we're doing, which we'll get into in the presentation here. I've been involved in the project for the last 3 years. My role is as Director of Investor Relations for Legacy Group. We're the outside asset manager and controlling board member of Green Coffee Company. We've been personally invested in the business since 2018. As a management team, we have over $2.5 million of our own money committed to the deal. I manage communications, onboarding, and everything as it relates to the investor-focused doings of us at Legacy Group. So as an investor, you'll hear from me regularly through our quarterly updates, through our email newsletter, and I'm the direct point of contact for almost 400 investors who have, as of today, about $50 million committed to us across all of our funding rounds. So I'm going to switch over here to a quick video of our harvest overview, and we'll go back to the slides. Just want you all to get a nice visual of the company. We have, a lot of videos, a strong portfolio on our YouTube channel, but I picked this one out because it's pretty recent and it gives a nice overview of what we did for our investors during the 2022 primary harvest. So let me pivot over here. Okay. I'm just going to let this run. It just runs over 2 minutes, and then we'll go back to the presentation. Okay, let me go back to the PowerPoint now, guys. Hopefully you enjoyed that video. Before we go into the text and the photos, I thought it would be nice to provide a visual for everyone here. So let me go back to the slides and we'll get into the meat of the presentation. So I already told you about myself and a brief overview of the company. So kind of moving on here, a summary of the Series C funding round, where we're currently at now and where we're raising capital from our passive investors such as yourselves. So as I mentioned, it's a US-based investment opportunity in green coffee company holdings. We've made it easy and frictionless to gain access to the market there. It's a $100 million Series C funding round. However, 25 million is our equity, which is for our investors. 75 million is bank financing, which we're actively sourcing from banks in Colombia in order to meet the business's objectives. We have a minimum investment set forth of $100,000. The goal of the proceeds here, this $100 million funding round, is to further solidify our dominant market position in Colombia, expand into roasted coffee. Right now, we're focused on unroasted green coffee, and then unlocking new revenue channels. So sales of vodka and spirits derived from coffee byproducts, which is a really exciting piece, which we'll get to later on in the presentation here. I already mentioned it's being done concurrently with the debt financing. The current valuation of the company, just about $80 million. It's equal to about 2 times the current liquidation value as of September. The base price in the Series C funding round is $1,200. However, we divided the raise into 3 equal tranches of 8.33 million apiece. We launched this in September. The first tranche has been fully funded and subscribed 2 months after launch. And tranche B, we have about $1 million remaining, where we're offering investors a 3.5% share price discount for early investment. In years where investors do not receive cash flow or dividends, we have a 6% pref or hurdle rate, which will accumulate on invested capital. And then once we sell the company or do our preferred exit of an IPO, investors' funds would be first returned to them, 6% per year on invested capital. Then above that, we have a performance bonus, which aligns the interest of us as an asset manager with those of our investors. So where are we going to be deploying this 100 million specifically? How are we going to drive forward the plan on behalf of our investor base? You could see half or more than half of the proceeds are earmarked towards farm acquisition payments and development of additional infrastructure. Infrastructure being the facility like you saw in the video I played, wet mills, dry mills, and means by which we could process coffee. And we expect to more than almost double land holdings from where we are today. We want to get to 15,000 acres by year end, up from 8,000 where we are today. Part of the business plan, an exciting piece, is building out a US-based roaster. So we expect to go more vertical, get into roasted coffee, also focus on B2B wholesale, but significantly make more margin per pound sold, kind of smooth out the volatility in the commodity markets. It's a really exciting part of the business plan, that US expansion, and we anticipate that that'll all take place in 2024. The alcohol distillation facility, I alluded to that. That's the build out of a distillery on site at our wet mills in Colombia, because 75 to 80% of the waste from coffee cherries is discarded. And we're looking at ways to monetize that and build a whole new revenue channel for our investors. At scale, once finalized, we expect our distillery to produce 38,000 bottles of vodka per day at capacity. Our US roaster is expected to do 30 million pounds a year of roasted coffee at capacity. The balance here, just over 20 million, working capital budget, retiring existing debt, and having monies needed to fund our trading operations. We have enough demand from our clients where we need to buy cherries from neighboring farmers in addition to processing it from our farms. So how did we become Colombia's #1 largest coffee producer? Where did we come from? How did we get here? In 2017, we seized the moment to create this business. We wanted to challenge Colombia's traditional way of harvesting coffee and build a business that would create value for all stakeholders, not just investors, but those who are involved at the farm level, our employees, people in the community. The Colombian coffee industry was really ripe for innovation, and we took a fresh perspective on this, and we've been executing on that thesis since 2017, with our ambitions multiplying each and every year. The first funding round allowed us to acquire our first farms, which you'll see on a map in the next slide or two, just under 1,000 acres. And we've grown that today to where we are north of 6,500. We had an acquisition done after this presentation, or this slide was prepared, from our Series C deck. So we've grown to over 7,000 acres today. So we're further building upon our position as the largest producer. Coffee being Colombia's national product, it's well known there. And we're doing a lot of things to create value for our investors and the community. A bit on our track record. Some of these stats are a bit enhanced from when this was created. We did another acquisition, but as of the time of September, when we launched our Series C funding round, we had 27 farms, 6,600 acres, 7.7 million coffee trees. You saw the workers picking the cherries and working on our farms in the video I shared. We have over 400 full-time employees, and even more than that during the primary harvest. 350 plus investors. We're actually approaching 400 today with the Series C round. Just about 50 million invested. We're a hair away from getting there. The product has several environmental certifications which allow us to sell it at a premium above commodity, in addition to being coffee in Colombia that sells at a premium to global commodity. There are some certifications that allow us to get even more than that, one being Rainforest Alliance, the other being CAFE practices. So the Rainforest Alliance is a very rigorous process. We've had the group come out to our farms and make sure that we meet all their criteria. CAFE practices allows it to be sold to an end buyer, such as a Starbucks at the end of the value chain. We're a member of CEA Colombia, which is the Council for American Enterprises doing business in the country. It gives us access to information from the embassy and things that are going on locally. We are being recognized and have been recognized by the local Colombian government. Last year, we received an award for Best Technological Innovation in Agriculture from Colombian Congress and Colombia's agricultural minister. So we really are truly leading the coffee industry in things like full-time employment, employing women, focusing on the circular economy, and increasing revenue from all parts of the value chain. I touched on the timeline a bit when I was talking through the past slides, but this slide here gives you a timeline of how we expect to deliver on those pillars that I mentioned. So scaling through the end of 2023 with additional acquisitions, growing up to 15,000 acres. We want to replicate what we're doing. Right now, we're the largest employer in the town of Salgar. It's about 2 to 3 hours outside of Medellin. And we've really created an operating nexus there. It has a primary harvest in Q4 of each year. So what we're looking to do is replicate what we've done in Salgar in another region of Colombia that has an opposite harvest cycle. The reason being that we can have year-round revenue in doing so. So we're looking at the Coffee Triangle, Quindío. It has a spring primary harvest. So we expect a significant portion of the proceeds of this round to be earmarked towards acquisitions in both Salgar and another region of Colombia. Launching our vodka and spirit brand through 2023. We already have the test distillery arrived at our wet mill, so we're going to be releasing some videos to our investors in the short term as that initiative unfolds. I'd expect by the tail end of this year or early 2024, we'll start to pump out ethanol and vodka and create revenue from that stream. The roasted coffee vertical, there's some time to build that out. We're diligencing locations in the US. By 2024, we expect to move a substantial portion of our coffee from a green coffee unroasted model through our roaster in the United States. So a bit of background of where we were in 2021 when we did our Series B round and where we were at the end of 2022 when we launched our Series C financing. At the time in 2021, we were Colombia's #3 largest coffee producer. We already were on a strong spree of acquisitions and really we're growing our position in the space and in the region of Salgar. Fast forward to the end of 2022, we solidified our position as Colombia's largest producer. Comparing the acre count, this is an impressive stat. When we did our Series B round, we were just over 2,000 acres. At the beginning of this funding round, we were almost 3 times that at 6,600. Now over 7,000 with a recent acquisition. Number of farms more than doubled. Number of coffee trees more than doubled in that period of time due to our investor capital committed. The forecast at the time of our Series B round did not have assumptions around the byproduct monetization. So that was birthed in between these two funding rounds. So we added in a whole nother vertical, which is included in our pro forma, and we're truly making revenue from waste or trash Doing so, we're increasing our expected return for our investors. We're forecasting an 11x net return on invested capital through a 2026 exit here in the Series C funding round. So the team really makes this opportunity special. I'm going to talk about some of the team members who are involved. Boris Wollner is the company president who we appointed. He is also a GCC board member. He has over 25 years of Colombian agricultural experience, has a background in agro-industrial engineering, and really has done a great job putting the pieces together and building an incredible team, bringing in advanced technology from Europe and developing parts of Latin America, such as Brazil, and applying that in Colombia. So we're really creating and have created the most advanced wet mill in Latin America, and other parts of the business are highly innovative as well. We're going to touch on formal employment and environmental sustainability later on, but Boris did a great job in moving those initiatives forward on behalf of our investors and the company. Cole Shepard is the founder of Green Coffee Company. He's also a partner at Legacy Group and a GCC board member. Prior to founding the company, Cole had a background at PricewaterhouseCoopers. He was a corporate accountant, so to speak, focusing on mergers and acquisitions internationally, spent time throughout Asia, throughout the Caribbean, ended up in Colombia, saw that it was a market ripe for arbitrage and for opportunity for investors. We built that thesis back in 2017, and we've grown to where we are today under Cole's leadership. Adam Jason, another board member at the company, also a partner at Legacy Group. Adam had a full career as a corporate attorney prior to joining us. Both him and Cole are US trained and went to school here in the States. Adam worked for Jones Day, helping companies go public, doing private and public debt and equity issuances. And Cole and Adam are the two partners at the firm of Legacy Group, the asset manager, in addition to being board members, as I mentioned. Carlos Villa is our new chief agronomist. Leonardo Sanchez, CFO. He was formerly the CFO for Fox in Latin America. So Leo brings a really interesting perspective and corporate background that he's applied to our business. I'm going to touch briefly on our strategic advisors at the bottom. Steve Oakland, this is a really incredible addition to the team, came on with us at the end of 2022. So Steve's background, now he's a strategic advisor with us, but his day job, he's the president and CEO of Treehouse Foods. It's a publicly traded company here in the US. Under Steve's leadership, they've done $4 billion a year in revenue. Prior to that, he was with J.M. Smucker, president of Coffee and Food Service, overseeing Dunkin' brands and Folgers. Steve has deep relationships that he's opening for us on the roasted coffee side. He's making inroads with Whole Foods, with Trader Joe's, among others. So Steve is an incredible addition to the team that we couldn't be more excited about. And the team, like I said, really makes this special. And it's what gives me the confidence that I have in the deal and in the projections. So we talked about the pillars, but this slide here kind of lays them out in a concise manner for you. So these are the three things we want to execute on with the Series C funding round proceeds. Pillar one is to continue what we do best in class coffee farming, production, and green coffee sales. We're already the largest, but our ambitions have not been realized. We want to continue to grow through more acquisitions, both in Salgar and in another region to have year-round production. The production from the farms is really what fuels the other two pillars, which is roasted coffee and byproducts. Without farms and without cherries, we can't produce coffee that could then be sold in the roasted manner and also the byproducts as a result of that. So pillar two is going more vertical, building out that US-based roaster, transitioning almost all of our coffee sale revenue into a roasted model by 2026. We see a path towards selling upwards of 30 million pounds a year in 2026 of roasted coffee, which will result in the bulk of our expected revenue in that year. We're forecasting over 200 million in revenue in 2026 from roasted coffee sales. Pillar three is the byproduct monetization that we talked about. This piece of the business expects to generate about $50 million in revenue in 2026. And it's a really exciting piece that our investors love and something really unique in the industry. So between all these three pillars, we're forecasting $266 million in 2026 revenue, 60 million in net income on that, and we're expecting to do a sale or IPO in that year. This slide here gives you a visual of the farming, production, and green coffee sale process. We plant the coffee trees in our own nurseries, which are headed up by women who are heads of households and leadership positions. Afterwards, we plant them on our farms until they're matured. They're monitored by our agronomist. Once harvested, we process the coffee in our wet mills, and then it goes through a dry mill after. It then goes through quality control and then delivered to our end clients. I like this map because it really gives a visual of where we came from in 2018 with that initial acquisition of 600 acres to where we are today. So the green shaded area is the land that we purchased with the proceeds of our seed funding round back in 2018. We had those for several years, started to build out the business plan. In 2020, you could see we expanded into the orange area here with another 1,700 acres. Then we did over 2,000 acres in 2021, just about 2,000 in 2022. And we control all these shaded areas on the map. That's this entry point in the middle is the town of Salgar. That's really the hub and the city in which we operate. And we already mentioned this, but we expect to grow in Salgar and in other regions with planned purchases through year end and grow up to 15,000 acres. So why get into roasted coffee? Essentially, there's more margin to be had and less volatility in the commodity markets. You can see the all-in costs here on this slide. Some of this pricing on the sales side is slightly dated, but it's very close to where we're at today. So the all-in cost for green, about $1.71 with a target sales price of $2.42. You can see about 30% margins there. If we get into roasted, all-in cost of $3.32, but we're at about 50% margins. So selling roasted through wholesale clients will allow us to make more profits for our investor base. Some stats on the roaster. We expect to do about 3 million pounds a month or over 30 million pounds a year. As I mentioned, 217 million in revenue in 2026 at a forecasted sales price of $7 a pound. Capital costs, this is expected to cost us $15 million from the Series C funding round and produce this type of revenue. Expected to be completed in 2024. And we want to build a fully automatic production system from roasting to grinding to packaging in the US. These images here are from our new roasted coffee brand of Bira. You can see a couple bags behind me on the shelf here. We recently launched this for our clients. We're selling it at a smaller scale to our investors and on a direct-to-consumer basis. This is our direct-to-consumer brand. As I mentioned, we're going to be transitioning over to a wholesale B2B brand, but we do have our coffee available for purchase, and it's quite delicious. I drink it every day myself. Pillar 3 is the untapped potential of the coffee cherry. That's the coffee byproducts to be produced from the cascara or the waste. We already talked a bit about the amount of the coffee cherry that is waste. We've done research and development, determined that it's high in sugar, it's nutritious, and it's available to us at no extra cost. So we're building that distillery on site in Colombia to create this new revenue stream for our investor base. In terms of the specs of this and what it'll cost, capacity of 38,000 bottles of vodka per day at capacity, expected to produce about $50 million in revenue in our exit year. Capital costs, $6.4 million from the Series C funding round proceeds, expected to be completed sometime at the end of 2023, perhaps in early 2024. And this will connect to our existing wet mill on site in Colombia, unlike the roaster, which will be based in the United States. I'm going to talk a bit about the impact and how we do things right and how that builds value for all stakeholders, not just our investors. So over the past decade, we've noticed that the world is increasingly focused on green investing, ESG investing. We want to be a part of this new generation of companies and businesses that are changing the cycle and of short-term thinking and focusing on long-term value. So by operating through an impact lens, we can operate with opportunities for our investors that are normally overlooked. Everything we do through an impact lens, such as value creation, efficiency, creating a positive image, and building a sustainable product. Sustainability sells to our clients. We can make a higher amount per pound that we sell. Our clients are willing to pay a premium for that. We also believe, as we approach an exit for our investors, that being a sustainable business will allow us to get a higher valuation when we look to exit. some key impact initiatives. I'm going to talk about formal employment because that resonates with me here. You could see GCC, or Green Coffee Company, compared to the sector average on the top left-hand corner here. Pension plans are something that don't exist typically in the industry. We pay 75% of our employees into pensions, but the sector average stands at just 1%. With healthcare coverage, we have 100% of our employees covered by healthcare. Sector average is only 3%. Formal banking, almost all of our employees are covered, with the sector average being half of that. So we're truly changing the way in which not only the way coffee is produced, but the way in which people are employed in the industry, really lifting up the community and caring about those that are involved. And you could see it when I'm there on the ground visiting the farms. I could see the level of satisfaction with our employees, the impact that we're having, and it makes me feel truly special about the work that I do, and proud to be a member of Legacy Group. We do more around impact. We have an entire slide on this. I'd be happy to share with anyone who's interested in learning more. Some of the sustainable development goals we focus on are on the left-hand side. It's not just about employment and social impact. We do a lot on the environmental side. We reduce water and waste. We're building out a solar farm at our wet mills in order to use sustainable energy. Everything we do is focused around this, and we believe that we can create meaningful financial returns for our investors, but also produce a positive social and environmental impact while doing so. This is the best part of the presentation, in my opinion, our exit plan and financial projections. So what does this all look like? How does this equate to returns for our investors? So some potential exit opportunities. So our track and our plan is to do an IPO exit. And we've modeled our financial model based on 20 times expected earnings in 2026. We do, however, have an idea to dual track the company. So we're dual tracking the business to be sale ready or IPO ready. Some potential sale exit options would be a corporate buyout. This is the simplest and most straightforward way. Think of someone like a large corporate player like a Nestle or a Starbucks that wants to control coffee at scale and at production. They could be a candidate for a buyout. A private equity buyout, it could be attracted by a larger private equity firm looking to get a later stage company in its portfolio. But really the IPO track, we see that as the most profitable option for our investors and should be available to us as an exit option based on market conditions. We've already structured the company to be a US-based investment. So for investor purposes, we're a US business with audited financial statements. We're really checking all the boxes in the exercise to become eligible for an IPO. We have team members who have done this before for other companies. Our partner and board member, Adam Jason, our other senior advisor we didn't touch on, but Chris Kelly with Jones Day as well. He represents companies in all these transactions, and he'll be helping us to drive that forward. It's a truly unique, innovative story, and one in which we believe that the assumptions could even turn out to be conservative, at 20 times earnings. I'm going to touch on that here, show you some comparable companies. So this slide shows you some companies in the space that recently had public market transactions. The first four had incalculable PE ratios or price earnings ratios because of their lack of profitability, such as Black Rifle, Reborn Coffee, Newsy, and Westrock. The others to the right, Coffee Holding Company and Duckhorn, they did produce a positive annual net income, but you could see the PE ratios that they went public at or did their transactions. Coffee Holding Company, a bit of an outlier, being a smaller cap company, but north of 100 times earnings at their IPO. Duckhorn portfolio, 37.5 times earnings. So at 20 times, that's the historical average of the S&P 500. $1.2 billion valuation. That's how we back into that at 20 times the 60 million. Being Colombia's largest coffee producer with vertically integrated operations in the US, we believe that this is conservative and reasonable to achieve. I'm not going to touch on every line item, but this slide here is pulled from our investor presentation. It has our pro forma. So you'll see, I'm just going to kind of walk through revenue and EBITDA and the growth trajectory. Under the basic income statement, you'll see total revenue. In 2022, we did, I have the preliminary financials, and we did achieve north of $10 million in revenue for the year and achieve true profitability for the business, which we're excited to report in the coming quarter once we finalize our audited financial statements and prepare the quarterly report. But this revenue is expected to grow in the years to come based on the business plan that we talked about. That's the build out of more farms, more facilities, roaster and byproducts. So how we scale is through the growth of green coffee company sales, then transition to roasted, the add-on of byproducts. And you can see revenue is expected to grow from just over 10 million last year to north of 260 million in 2026. 60 million net income. We talked about the $1.2 billion valuation expected at exit. Going down to the bottom line items on the IRR calculation, this works out to be an 11x net return on invested capital in this scenario for our Series C investors. So we have an offer for you guys at left field. The first box here is our standard terms for investors in this stage of the Series C round. So we're currently in the second tranche where we're offering investors across the board share price discounts. Base share price is $1,200. Individual investors who commit $100,000 are eligible for a 3.5% share price discount. At the $250,000 level, we're offering a 5.5% share price discount. That works out to $11.58 and $11.34 a share, respectively. We have some terms for a community threshold that could either be done individually as an investor or through the tribe. If the LFI group gets to $1.5 million collectively, no need to invest as an entity. If you do, that's fine. In the next 2 weeks, we're going to add an additional share price discount. So we're going to increase the discount by 2.5% to each person's already existing discount. In the example, the 100K minimum, the 3.5 will go to 6% and so on. The 2-week period, the reason for that is that we expect this tranche of the funding round to be over in that period of time. We've been raising at a rate of about 3.5 million per month, with just 1 million left here in this phase of the race. We're going to pivot now, make it more conversational. I'd like to open up for Q&A. My contact information can be found on this slide. Please get in touch with me. Email address can be found here, investor.relations@legacy-group.co. And would love to speak with you, but we have time here for Q&A. So
Awesome.
I'd be happy to get into that.
Yeah, thanks, Josh. Really good stuff. Thank you for sharing all that info. We do have a couple questions in the chat. If you want, I'll read them off and you can respond. The first one related to the roasting facility, and the question was around why build it in the US rather than in Colombia. I think you had a bullet point on that, but I don't think you really hit on it, but maybe you can expand.
Sure, I'm happy to expand on that. So why the US? So our end clients on the roasted side are expected to be in the US, right? So think Trader Joe's, Whole Foods. Freshness is important, and origin is also important. So while the beans themselves are being grown and processed in Colombia, it's more efficient to do it there. It's actually can only be done there, not in the US. There's other countries as well. The roaster will allow us to be closer to our end clients, and it'll allow us to control things, I would say, in a more efficient manner. And you'd be surprised to know that the cost is not very different, because the bulk of the cost is in the equipment. So it's about $10 million of that budget is the roastery equipment. So it's something that even if we did it in Colombia, it's not like, oh, you could do it for a third of the price. Like you go out to dinner and you eat for a third of the price. It's not the same kind of concept. So freshness is a factor, access to talent, gaining more of a US presence as we look to do that US IPO. While we do have a holding company structure here, having operations and physical locations and part of the value chain here will allow us to unlock more value for our investors as we look to do a public market transaction.
Makes sense. Related to the IPO then, another question was understanding the structure of investors that are getting into the tranches now. If you do go IPO, do those investors remain in and continue to cash flow, or are they bought out at the time of the IPO and you step away?
It's a great question. So while we are dual tracking the company for sale or IPO, only in the sale scenario would the investors be cashed out or have to be cashed out, right? So if we sold the company outright and it was in the best interest to do so for our investors, that would be a liquidity event where you would be cashed out as an investor and be subject to long-term capital gains tax. In the event of an IPO, which is our preferred exit strategy, investors are not forced cashed out. They have liquidity in public markets and will go from being shareholders in a private operating company to shareholders in a publicly traded company. So investors would have control and liquidity on day one of trading in this scenario to sell all, none, or part of their equity position and do planning as they see fit in that scenario. If we were paying dividends prior to an exit or after exit, those could continue if continue to be declared. But as far as the liquidity itself, investors would have a lot of flexibility in the IPO scenario as to what they'd like to do.
Great, thank you for that. And then the last question that's listed in here, I think it relates to the roasting, the price after. The estimate was that it was going to be $6.50 a pound today, and estimated that would go up to $7.11 in 2026. It says seems high for wholesaling pricing. Can you explain pricing logic around that?
Sure. You may be thinking of us compared to someone like a Starbucks, right? Or a coffee that's above commodity, like not Maxwell House or Folgers, but something that we're accustomed to drinking. We're definitely differentiated from that. We're at a higher price point. So this is most certainly a specialty coffee product that has single origin and a sustainability story. So we're pricing it based on competitors in that space. And it's normal that it sells for, on a retail basis, a coffee like we're talking about around $20 a pound, perhaps. So that's kind of their logic and reasoning there. It was carefully drawn out based on comparables, and we think that price could even be conservative in the wholesale side, but that's the kind of logic behind that.
Great, thank you. Another question popped up. What are the largest geopolitical risks you see in Colombia? Example, government instability.
Sure. There was some fear before the new president came in, Gustavo Petro, that Colombia would have some instability, that what would happen with investment and in the region. And since on the campaign trail and since being in office, he's only shown support for Colombian coffee. So the new president and the new regime is coming down on oil and gas, which is a big industry in Colombia. He's coming down on kind of illicit industries but very much supporting the coffee industry. He wants the country to become more of a producer and less of an importer. Obviously, coffee checks that box. It's Colombia's national product. It's one that employs millions of people, and doing what we do in a sustainable manner, formally employing people, really lifting up the community. It bodes well for the administration. I mean, you could see that in the award that we got last year by Colombian Congress. We also had an inauguration event at one of our new wet mills last year. We had members of government. We had the governor of Antioquia, the state where we operate, prepare an opening address. That could be found on our YouTube channel. We had members of Congress, senators, people from Starbucks. Like, we're very well known for what we do, and we've had nothing but support from the government. It goes without saying, you need to know and really understand the local market. You need to have Colombian people on your team. You need to understand how they think and do what's expected of you and deliver value. So not to say it's not a headwind at all, but we're doing what we can to mitigate that risk.
Great, thank you for that too. I'll ask a general question for you. We're a community of limited partner investors. This isn't your average 250 unit multifamily apartment building to vet and understand. What tips can you give our group to understand how to dig in and vet this deal and decide if they like it or not? Any advice you give along that way, since this isn't the average type of investment that a lot of us look into?
I'll start by saying that many of our investors invest in traditional syndications as well. And this is a means of diversification for them into other asset classes, other geographies, and it's highly uncorrelated, I would say, to the rest of what makes up our investors' portfolios. That being said, I'm going to drop a link here to our investor portal, and I'm sure that you guys can distribute that in your own internal means. But if you put in your info here, you'll be able to go to our deal room. There's a documents tab. It has our investor presentation. It also has our private placement memorandum and our deal docs, such as our subscription agreement. So I would encourage investors to, the presentation I went through today, it had some slides from our Series C presentation. So a lot of those will look familiar, but it's been slimmed down. And so I would go through the presentation. I would look at the private placement memo, which is a bit of a dry document, but one that really will allow you to understand bios on management team in greater detail, risk factors, business plan. We have a real strong portfolio of videos on our YouTube channel, which will give you more of a visual of the company. I showed one in the beginning, which is the harvest overview, but I would encourage any prospective investor to review the three of those: our investor presentation, our private placement memo, and our YouTube channel. I'd be happy to have individual follow-up conversations to address questions that weren't answered here, to build comfort, whether that's over a call or through emails. And yeah, we could subscribe you to our email newsletter so you can stay updated. Our investors get regular communications, which allow them to feel comfortable and informed. So kind of all of the above there, I would recommend.
Makes sense. We had a couple others pop up. If one of the three targeted exits doesn't happen in 2026, can you speak to what the plan would be for continued operations or exits down the road, what that would look like?
Of course. So in the event that we don't exit in 2026, the preferred rate or the hurdle rate will continue to accumulate for our investors. So we have a 6% pref that accumulates each year. So that would be another year of pref accumulation. In the event that we don't do it, there would be a reason. We would do it because market conditions don't dictate it, right? If it's more valuable that we do it in 2027, as an example, and we're going to unlock the most value for our investors, we're not just going to exit in 2026 because we said so in 2023, right? It's based on a set of assumptions, of course. We expect to meet those and be in a position to do it. But in the event that we did not, you would continue to own shares in a private company. The pref would accumulate. If we were paying dividends at the time, dividends would continue to get paid. I would look at it more like a growth-oriented investment. While we are forecasting some annual yield in the holding period, I would look at it as more of a hockey stick return profile. So if we don't exit in 2026, I'd expect there's a good reason for doing so, and we would have a path forward from there. We're very open and communicative. We do quarterly updates in written form and in live Q&A webinars such as these. And so as the business plan evolves, for example, with the addition of the byproducts, which is new to Series C, we communicate that through presentations and updates. So investors will never be left in the dark as to their expectations.
Great. Last one sitting in here is it possible to purchase insurance on the crop harvest? And if so, do you purchase those insurance policies?
We do not have insurance on the crop harvest itself, but we do have the real estate insured, right? In case there is a event such as a landslide or adverse weather that causes damage. We do have policies that protect the structure and the equipment at our farms. I'm not entirely sure, and I don't want to speculate if the crop insurance exists there in Colombia, but I know we have insurance on land and assets.
Gotcha. Makes sense. Any other questions? That's all of them that are in the chat. Any other questions as we wind down here? We'll give a couple seconds for them to pop up, but Josh, interesting stuff. Again, thank you for being engaged with Left Field and keeping the conversations going with Jim. I'm glad we were able to get to this point today to have you be able to present the product that you guys are putting together. It seems very interesting. So
you're welcome, Chad.
Appreciate that. But looks like we are kind of winding down on questions. So unless there's anything else you want to add, I think we'll call it at that.
No, I think that's it. I'm looking forward to hopefully hearing from you all. I'm guessing this will be available recorded for other members who are able to join. I see it's recorded here. So like I said, anyone who would like to get in touch, feel free to contact me at the contact information that I shared on the slide. Access our deal room with the link provided. Looking forward to hopefully welcoming more of you as investors here in the Series C funding round.
Gotcha. Oh, we did have one more scooted in here. What would the highest potential risk be to executing the business plan in total? and/or within projected timelines?
Sure, Ryan, I could dive into that a bit. I'd say the biggest risk in agriculture is weather. So in any given year, kind of tying back to that crop insurance question, right? In any given year, there could be adverse weather patterns that affect output. So last year, we saw some competitors in Colombia that had production like 45% less than they expected. We fared much better than that, but due to La Nina and excess rain, there's been kind of a lower primary harvest than expected in a year such as 2022. So that could happen in any given year in agriculture. You have to pivot, you have to monitor weather patterns as best as you can and plan accordingly. What's good about supply chain pressures is that often there's price increases as a result of that. So as a producer at origin, when there's disruption such as droughts in Brazil or excess rain in Colombia, it can cause coffee prices to rise. So even though you have lower production in a given year, that causes supply to be lower. And in essence, you can sell it at a higher price, but it could also be limited to just your region, which is not good in certain cases, right? So we have sensory equipment that monitors weather patterns, rain, sun. We fertilize things in an intelligent manner, and we do everything we can to mitigate risk as it relates to weather. We have the best agronomists that you could buy in Colombia in order to do that. Other risks, I'd say, to executing on the business plan, probably macroeconomic conditions, right? I expect the market to be in a strong position in 2026, and the senior economists at many places seem to agree with me. But that's not with certainty, right? So in 2026, is it going to be a good year for selling a company or doing an IPO and getting maximum value? That kind of remains to be seen, right? But being a innovative company that's doing what we're doing, there's IPOs in any market. So we believe in creating like truly innovative products and services, adding value, not just kind of like a phantom tech company that's all software and whatnot. It's a real asset business, right? So macroeconomic conditions, I'd say, will play a role. We'll keep our finger on the pulse there and make sure that conditions are right, but that can cause timelines to move, as one of the last people mentioned, like what happens if we don't exit in 2026. So that's a headwind and a risk that I would say could move timelines in the business plan, but one which we're comfortable navigating.
Great. Well, Josh, again, thank you very much for the presentation. We will be publishing the recording, and if you send the PowerPoint along, we can add that to the mix of materials as well. But really enjoyed it. Thanks for coming on today, and we'll see where the group goes with this.
All right. Thanks, everyone. You have a great rest of your day.
Thanks, Josh. Take care. Thanks, everybody.
Take care.